Welcome to the Slop Temple. We pray this video helps.
In this video, I will explain how to file an estate tax return. First, assess the gross value of the estate to see if a federal return is necessary. If it exceeds the exemption threshold, you'll need to file. The primary form is IRS Form 706, United States Estate and Generation Skipping Transfer, Tax Return. Begin by collecting all financial records, including asset valuations and liabilities, to ensure accurate reporting. Accurate valuation is crucial. You must determine the fair market value of all assets on the decedent's date of death. Sometimes, an alternate valuation date, exactly 6 months after death, can be used if it reduces both the gross estate and the estate tax liability. Remember to account for allowable deductions, such as funeral expenses, administrative costs, debts, and charitable bequests, to reduce the taxable estate. Once valuations and deductions are finalized, meticulously complete all relevant schedules on Form 706. This includes detailing assets like real estate, stocks, and bank accounts, as well as all allowable deductions. After calculating the total gross estate and applying deductions, determine the net taxable estate and the final tax liability. The return, along with any payment, is generally due 9 months after the date of death. After filing, maintain comprehensive records of everything submitted, including all supporting documentation. The IRS may have questions or initiate an audit, so organized records are essential for a smooth process. If you need further assistance, consider consulting with a tax professional specializing in estate planning. Also, for other great deals and the link to those amazing darn tough socks, check out the description below.
Thanks for watching. Consider subscribing if we helped you.